But yeah, NIHD, this is an even cleaner triple top. This is what I would really love to trade. This one is an obvious pattern. Obviously a flat top wedge. You can see it topped out at 492 one time. The second time it slightly broke out, but that's, you can count that as a double top. Fell back down but made higher lows, and then it just squeezed into this flat top wedge. On the third test of 492, it broke out. You can see the volume increase. Look at how once it started to break out, the volume was increasing exponentially, and the price just squeezed. So why do we have 492 as a level marked out, guys? What's the number one thing I always tell you all to do when looking at a chart? Look at the daily chart. It's always important to look at the daily chart first to see where the critical levels of support and resistance are. So looking at the daily chart now, we can see 492 level. Just kidding, it's not. I think that was just, wait, what? I swore that was a level on the daily chart. I like swore. Okay, maybe not. Maybe it was at the 476 level. Yeah, right up in here. Okay, so disregard what I just said. I mean, no, don't disregard it, because still it's important to look at the daily chart for levels of resistance, because you can see that the 476 level that was made on June 28th, keep in mind that that was on around 6 million shares of volume, so it's pretty significant resistance. You can see today that was a clear level of resistance as well, but it easily just kept making higher lows, and it squeezed on through that. So it squeezed up on volume after breaking over the 473 level, hit a high of the 492, and then it pulls back and starts to do this flat top wedge. So this is why I always recommend that you don't buy just any regular U shape, especially if all day the stock is uptrending and just keeps breaking higher and higher and higher. You need to wait for the bigger picture pattern. So ignore the first break, but then you focus on the potential of a triple top flat top wedge, because that's an even better pattern, and I would much rather trade the triple top flat top wedge instead of just any regular old U-shaped breakout. So we got the double top, we pulled back, we made higher lows, as you can see here. Let me just clean up the chart a bit. Let me take away Bollinger Bands, and then we'll just graph this out. So you can see the first dip based around like the 73 cent mark, right? The second dip based around 479, just about. You can tell that overall it was holding the 20 EMA as support, and it was just making higher lows. That's the most important thing. And the very nice thing about NIHD is that because it has a higher float, it moves a lot more smoothly. As you can see, these lower float stocks, BLN, they like to move a lot more volatile, and that can really break up the pattern and make it harder to see the true pattern. But here on BLIN, the pattern's very clear. Obviously a flat top wedge with 3 tests of the resistance, and on the third test it breaks out. So then you buy the third test, you buy the breakout, and then the next goal is just to make sure you don't get greedy and you take your profits. Of course, in a play like BLIN, if I was to buy this flat top wedge, buying the breakout over 492, I would probably have my risk level set at the break of this dip. So that would be around 478. So you're risking about 2.8%. You're risking just about, what is that? Like 12 cents a share. So then you should aim to make at least 24 cents a share, meaning that if you're going to risk 10 cents, you should make 20 cents. You should have at least a 1 to 2 risk reward ratio. If not, then over time you will over time lose money because you'll take more losses than winners, and your losses will be bigger than your winners. So in a trade like NIHD, if I know that, okay, I'm willing to risk off of the previous dip, which is the 478 area, that means that if this spikes up and breaks out, I don't want to take profits until it hits like 515, 520, and then I start to lock in some profits. And then, I mean, the rest is just a matter of being able to take profits along the way. One thing I've noticed is that once we actually go into the parabolic spike, what seems to work very well, if you want to get the most out of the move, is one, use the 13 EMA, and then two, let me get the Bollinger Bands back. You can just start to take profits whenever the candles like start to come back into the Bollinger Bands, because once the candles start to drop back in, that kind of signifies that the run is done. The run is signified by the candles following almost perfectly the top Bollinger Band line. So once you start to see the price kind of droop into the bands, you can assume that, okay, this initial run is done, and I can lock up the rest here because it'll likely just keep falling on down. So all in all, very nice pattern there on NIHD. Like I said, it had no news, no real catalyst, just simply had a nice breakout that people really liked. Has been running for 2 days now. And the most interesting thing about NIHD is that it has a very big float. Let me just bring over the float value real fast for video purposes. Here's Yahoo Finance. See the float, almost 60 million shares in the float, which is very, very, very big. But all in all, nice pattern. We've seen this pattern many, many, many times. It's simply a flat top wedge with a triple top.